So I got this graph showing that serious delinquency rates are going up in the United States, and serious being defined by, folks that are 90 days or more behind on their mortgage payment, right? And overall, the percentage of serious delinquency rates against the amount of mortgages out there, albeit is quite small, right? Like a serious delinquency rate might be 1.5%, so to speak, right? It did cause me to go down this rabbit hole and begin to think about why are serious delinquency rates going up, apart from the obvious, which is, if you ask folks, they would say everything's more expensive, and that's really it, right? But I think there's more to this story, right? And I'm going to point to renovation lending as a solution. No surprise there. And when you look at states with the highest change in delinquency rate, there is a common tone. And here's what I mean by this. You have your mortgage payment that for the large amount, 9 or more % of the country is in fact fixed at a number. How much you pay your mortgage company, or how much you pay for your mortgage is a better way of saying it, is a fixed figure for a long period of time. Call it, most 30 years, but you don't keep your 30-year mortgage for 30 years. Very, very few people do. It's the other things that are happening that make up the rest of the payment where you start to see increases, that are pretty significant. And I'll call this, for lack of a better term, escrow creep. Right? Because you make your mortgage payment, but in addition to that, the things that are included in your mortgage payment, like taxes, insurance, and other items. If you're in a condo association, your condo fees are sometime included in that number, right? So you look at the top states and you see that escrow creep is the real monster behind the curtain here, right? You may have gotten a mortgage in 2017 or 18, and you may have committed to, I don't know, let's call it $2,500 every single month in principal and interest to your payment, but your taxes and your insurances, for whatever reasons, have creeped 70% more, almost double what you originally agreed to in 2017, and these are things that don't go away. They just don't go away. Taxes are just there. You rarely hear stories about, property taxes being decreased, right? So I think that's the real story with what's going on with a rise in serious delinquency rate, is you have all of these other measures happening on top of the mortgage payment that are just making it difficult, right? And then why can renovation lending help? Well, I'll point to a couple things. One is, if you're an entry-level buyer and you want to avoid what I'm calling escrow creep, the purchase price on properties being sold at a discount because of its condition that you have to renovate are generally lower, right? You have control over the insurance costs to some degree, right? You renovate your systems, roofing, electrical, plumbing, HVAC, can qualify for lower homeowners insurance, specifically if you are doing energy efficiency things, and it can just help reduce the insurance portion of the escrow, which is one of the biggest growing parts of your payment commitment, outside of the mortgage itself, right? It also can help stabilize the mortgage payment because it combines the purchase and the improvements into a single mortgage based on the after improved value, so you're not likely to add to use whatever equity you create, for further improvements down the road, right? So I'll also throw out the caveat that, renovation, lending doesn't completely eliminate escrow creep. States like Florida and Colorado, which show some of the highest escrow increases, are also where property tax reassessment and insurance premiums have risen sharply, especially after natural disasters, for example, right? My strategic sort of thought around using renovation lending, particularly as an entry-level buyer, is yes, buying and renovating a discounted home helps reset, the tax base, gives you control over insurance risks, and avoid inflated turnkey pricing, I guess is what I would say. But you're not completely immune to it. So I'm Sean Thompson. Reach out to me if you're looking to get the home you want at the price you want in the, what I like to call, worst house on the best block in the neighborhood. You know where to find me.